Welcome back. This is Open Exchange. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, the S-Shakes Nifty suggesting a bit of a green start to trade, but a good time to get you some F&O ideas. And Chandan Taparia joins us to tell us exactly that. Morning, Chandan. What's your trade on the index as well as the strategies that you have for us?
Good morning, Nigel. Thanks for having me. So the index got stuck in a range where declines are being bought, but absence of follow-up is totally missing in the market. So in last couple of days, we have noticed that on downside, it has support near to 17,650, but at the higher side, it is not holding well beyond 17,888. So we believe that we have the boundary between 17,650 to 17,888, and in between, it is hovering near to 17,777. So we need to just play this range with buy on decline by playing the major support zone. Similarly, Bank Nifty has major support near to 41,000, hurdle at 41,750. Buy on decline can be played here as well. So likely to be in a broader range and have to play the stock specific activities. So talking about trade setup now, first trade is buy on LNT. This stock is holding well. After the budget, we have seen good attraction in most of the capital goods name, and LNT is holding well to its 50-day exponential moving average. Respecting to its rising support trend line, we have seen good rollover. Now put writing activity with call buying is visible in the stock, so recommending to buy with support of 2160, and here we have a target towards 2280 level. Second trading idea, that is buy on Titan, also a volatile pick as well. So Titan has given a small pollen flag pattern on the daily chart and looking strong. We have seen some short covering and call unwinding, and now fresh long can be seen in the counter. So stock can rally by 3 to 4%. Looking by its price setup, can buy with a stop loss of 2480 for target to our 2600 level. Last trading idea, that is sell on Canara Bank. This stock is finding multiple hurdle with call writing activity, so can sell with a stop loss of 292 for the downside target towards 273 levels.
Okay, guys, hope you got the hint. Titan is a Valentine's Day pick, okay? So the watches and the jewelry and everything has to come through. I mean, that's...
Look to your right.
I don't know who to look at. Which one of you is going to go for it, right? Thanks, Chandan, for that. Chandan's definitely going for Titan as a stock idea and a Valentine's Day pick. All right, got that. Thanks, Chandan, for joining in. But let's talk about something sweet now. Balrampur Chini is in focus. Not so sweet this time. It was a weak quarter for them, impacted by seasonal factors. The company's distillery profitability also came under pressure due to the delay in sugar crushing and the ongoing expansion in their plant. Distillery sales volumes also declined due to a lower feedstock, but average sugar realizations were higher on a year-on-year basis. Pramod Patwari, the CFO at Balrampur Chini Mills, joins us now to discuss more on their performance. Mr. Patwari, good morning and thanks a lot for joining in. You know, before I ask you about your sugar business, I wanted to talk a little bit about this whole ethanol blending capacity, because, you know, that is the big trigger, of course, as we move along into the future. To go from 10% ethanol blending to 20%, I want to understand, is there enough industry capacity in terms of value? What is the opportunity for you? Because the last time when we chatted, you said you're operating at full capacity of 35 crore litres of ethanol. What is the opportunity for you?
So as far as Balrampur Chini is concerned, I think I need to take you slightly back. In 2022, we produced around 12 crores liter, and for the period ended December 22, our production is 12 crores liter. In the next quarter, our target is to produce 9 crores liter, and our capacity will be 21 crores liter. For FY24, the full capacity is 35 crores, as you rightly say. Now, for the industry as a whole, we achieved 10% blending 5 months in advance. Current blending is around 10.8%. For the ethanol year 22-23, government has come out with a tender requirement of 600 crores liter for 12% blending. Now, in order to achieve 20% blending by 2025-26, we need larger capacities which can produce ethanol out of juice root. For that, government needs to incentivize the setting up of distillation capacity by giving slightly a higher price for juice-based ethanol. That is what the industry's expectation is from the government side, so that the industry can supply 20% requirement.
So in terms of value, what could the opportunity be? I mean, expecting that this capacity comes through and the government provides that kind of subsidy or that, that kind of mechanism, what would the opportunity be for a company like you?
So currently we are at around 35 crores liter. By FY24, our revenue composition will be 35% of revenue will come from distillery, and the profit could be around 60% plus. Now, if we get a visibility of better ethanol prices for juice based, we have multiple options. In fact, in the last year, whatever capex we have done, we have laid the foundation for the future growth. We have set up a new distillery at Mirzapur, which is a dual feed distillery. It can be replicated at any other location. In addition to this, we have already increased our capacity of Balrampur from 170 to 330. Now we have created the space in such a manner that said Balrampur distillery can also be raised from 330 to say 660. But for that to happen, we need some sort of incentive from the government of India so that a larger portion of sugar can be sacrificed.
Okay,
2 years
right.
back, 2 or 3 years back, we used to produce around 1.3 million ton of sugar. We are in the process of sacrificing almost 0.3 million ton of sugar. Our net production of sugar is now around 1 million ton.
Okay, all right. Mr. Patwari, as you say, there's tremendous scope for the distillery segment as well. So what is the incentive you're looking forward to, if you can quantify some part of that? And if you get the required incentive, then what kind of a capacity addition will we look at from this 35 crore litres? What does the number go to? And how much of capex could it roughly be?
So when we say incentive, it is not exactly incentive. What we are looking for is the better remunerative prices for ethanol made out of juice. Currently, the price is around 65.61 per litre. That needs to be raised by 4-5 rupees a litre. That's all what we are looking at. And for a country to achieve a 20% blending, 1,000 crore litre of ethanol is required. Currently, we are at around 400 or 450 crores. Let's hypothetically assume that 400 crores of incremental supply of ethanol comes out of juice. For that, 5 rupees a litre is nothing for the government in the whole scheme of things, which is 2,000 crores. For Balrampur, in order to go into that direction, we need to work on the cane. For that, we are working. Last 2 years have been extremely bad for us.
Yes.
Current target we have given, we are looking at a 15% increase in volume for the current year. And if this comes, then next year also our internal estimates as of now is 10% minimum increase.
So this year, sir?
Much.
Yeah. So this year, what do you end FY22 with in terms of number of litres, FY23 and FY24, the absolute number?
For distillation, FY24 is around 35 crores.
25 crore litres for this year, and for next year?
Sorry, Nigel, for FY23, it will be around 21 crores litre.
All right, and next year's 25 crores.
For FY24, 35. Next
35.
year is 35.
Okay, you go to optimal. And suppose you get this 5 rupees extra that you're asking for per litre, then, what is the capacity addition you could be looking at, since we are at 450 and we have to go to 1,000 for India on the whole? So what would be the capacity addition you're looking at, Mr. Patwari?
Oh, yeah, just to give you an example, if we just replicate the Mirzapur plant, we can have an annual incremental capacity of 10 crores.
10 crores.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and all the best for the future. That was Pramod Patwari of Balrampur Chini talking about the 20% blending of ethanol that the industry is looking at. He says they need larger capacities to produce ethanol out of juice route and some incentives from the government. Dipan is with us. Dipan, any thoughts on this? Balrampur Chini at 360, is the risk reward favorable for investors?
Sonia, more than the sugar industry, I'm excited about the prospects of Praj Industries. I think if you want to double the capacity of distillery in India, then there are very few capital goods manufacturing companies which have established track record. And Praj Industry really is amongst the best of them. And its advantage is the technology where it can create ethanol fuel out of several feedstock, including plant waste, so agro waste as well. And that really is going to be the company to watch, because sugar companies, they have these volatility in earnings. And even after so much of ethanol opportunity, I have not seen a visible improvement in their price to earnings ratio. So it's a great, I think, development taking place within the energy sector. But there are other ways to play it than the sugar industry.
All right, Praj is one of them, as you point out. Deepan, it's a pleasure. Thank you very much. Have a good day. We'll see you back soon again on the program. Well, let's little before 9:10, but let's get those calls out of the way. Sudarshan and Mitesh are back with us. Sudarshan, what's on your radar?
Well, the Nifty is in a range, so only trade when it goes beyond that range. HAL is a buy, Hindustan Aeronautics is a buy with a stop under 2400.
Okay, that's HAL. Mitesh, what about you? What would be your top pick at 9:10?
I will go with the buy on Titan with a stop at 24.95 and a target of around 25.70 to begin.
Okay, all right. In pre-opening, actually, the rates are settling higher. The Nifty is up almost 70 odd points. Would be interesting to get your attention towards Nykaa and a couple of other stocks. Z Entertainment had very weak numbers, so that one is on the downside. Campus Activewear as well is down 1.5% post muted numbers. And look at Nykaa, 5.5% lower there. But Sonal is with us to give us the latest on gas companies. Sonal, over to you.
Good morning, Sonia. Let me start with Gujarat Gas. Reported numbers during market hours yesterday. It was a strong beat. Some brokerage commentary coming in there as well. Let me start with Nomura, which has a reduced rating with a target price of 410 rupees per share. It was a strong Q3. It was driven by higher than expected margins, much higher, 16% versus 10%. Rise in propane prices will drive higher volumes because now companies will shift back to Gujarat Gas, and volumes this time around declined, which reflected lower offtake from the industrial segment, specifically the region, which is an issue. Jefferies has an underperformed rating with a target price of 405. They said EBITDA was ahead on higher margin, even as overall volumes were in line. Recent propane economics, they have turned favorable because propane prices are going higher, so industries will shift back to gas. HPHT allocation and APM price cap will provide margin comfort in CNG, something that we have been highlighting. So they have revised their EPS estimates by 3 to 6% on the higher side. On the flip side, for Motilal Oswal, there has been a downgrade for Petronet LNG and IGL. They've downgraded Petronet to neutral from a buy and downgraded IGL to a sell from neutral. For Petronet LNG, they do not like the non-sustainability of their EPS growth, and there is concern on utilization of assets and how they're investing in volatile areas as well. For IGL, they say that almost half of the incremental volumes are going to be coming in from the industrial segment in the NCR region. This will ensure that EBITDA per SCM will become very volatile for the company, and that's why these downgrades that have come through from Motilal Oswal.
Okay, all right. Sonal, thanks a lot for that. Sonal, I think you should hear what Mangalam has to say, because he's going to be talking about Nykaa, and I believe he was listening to what Chandan's advice was as well on Titan. Mangalam, tell us about Nykaa for now. Sonal's listening in.
Well, I'll tell you about Nykaa, and it's not me who's saying it, it's Goldman Sachs who's saying that they were positively surprised by the acceleration in their fashion growth, whereas the beauty and personal care actually surprised negatively. They have a neutral rating with a target of 200 on the share price. In fact, Jefferies too has a 200 per share sort of target rating, and they believe that the GMV growth this time around was led by fashion and others. BPC was weak primarily on account of a high base and shift in the festive season, and the gross margins were lower because of inferior mix, discounting and down trading. Edelweiss, that's the most interesting one out there, because they've cut their target price from 251 all the way down to 195. Why is that? On two factors. One, they've lowered their FY23 EBITDA estimates by 8%, but secondly, they've increased their cost of capital assumption. So as a result of which, you know, the discounting rate has increased and the target price has come down. So let's see where the stock goes.
And actually, Mangalam, thanks very much for that. I want to just put out a chart as well for Nykaa, which I think puts all of this price action since listing into context. And this is interesting because it's similar to what we put out in terms of Policy Bazaar. I mean, it's the same trend line from the highs right after listing for Policy Bazaar, and this is this one for Nykaa. You can look at that, right? This is basically all the way from December of 2021. The stock listed listed on November 10th, November 2021. So exactly a month after, it made a high, which was closer to about 430 or so, adjusted, of course. And after that, it's basically just a one-way downward kind of slide. There were multiple attempts to take this out around April of 2022, the first touch point. Then, it spent a lot of time treading water around this trend line, between August of 22 all the way to October of 22. I mean, but never really got out of this sort of range conclusively, as you can see. There was one brief attempt. I mean, this perhaps the only meaningful attempt when the stock traded above this. That was, on the 11th of November, it broke out. It made a high of about 224, but then promptly 2 days later fell under it and has been under it ever since. We are coming up to this level once again. Let's see if we get a higher start. But basically, the level to watch here is, about 157, 158-ish. I mean, if you get a solid close above it, I mean, I guess we can talk more in terms of what the stock can do. But otherwise, it's got to get out from under this trend line, which has been in place pretty much from the word go listing in 2021.
Okay,
Sonia.
so let's keep an eye out on Nykaa. That will react, of course, to its numbers as well. But just a couple of seconds left before the markets open for the day. And looks like there's going to be a positive opening. The Nifty is up about 0.3%. That 100-day moving average, of course, has become a hurdle for a while. But now looks like there will be some green on the screen, led by Infosys, HCL Tech, TCS, Wipro, L&T in the green, Asian Paints, Hero MotoCorp, a lot of the consumption names in the green as well. And the market will be reacting to weak earnings from the likes of Z Entertainment. So keep that on your radar. And a lot of Nifty companies coming out with earnings later today, whether it's ONGC, Eicher Motors, a lot of these stocks will be reacting to their numbers. Grasim coming out with numbers later in the evening as well. BPCL is down almost about 0.5%. And in fact, this month, if you look at it, a lot of the NBFC names have been gaining ground. So something like a Bajaj Finance has been a big mover lately. That one is also in the green again this morning. That's the first take on the index. The Sensex and the Nifty up about 0.3%. The Bank Nifty up about 0.2%. And the advanced decline ratio well in the green. So good opening tick for the market. No complaints at all. Adani Enterprises is making a bit of a comeback. So 1740 now on Adani Enterprises. That's a gain of 2%, and that's the big mover on the index. Adani Ports as well. So some recovery coming through there. Then you have the IT stocks, Infosys, HCL Tech, TCS, Wipro, Tech Mahindra all in the green. So that pocket is looking decent. UPL is up about 1%. And something like an M&M, which has been gaining ground since its numbers, is up in the green as well. Talking about M&M, the other auto stocks too, Maruti, Tata Motors, all in the green right now. Bajaj Auto as well, trending a bit higher. So what's not looking good then? Apollo Hospitals comes out with earnings later today. Ahead of that, the stock is down about 0.5%. You have Sun Pharma, there's Titan, there's, well, no Valentine's Day cheer there, looks like, at least for now. Asian Paints, Sun Pharma, Cipla, BPCL, a couple of other stocks that are trending in the red right now. But otherwise, it's quite a decent opening, you'd have to say. The Nifty is holding with gains of 67 points. Important to see if this holds, because the market is very volatile, as you know. Nykaa is your big loser, down almost about 4% post its numbers, and then plenty of other stocks in the broader markets. But otherwise, it's a decent opening.
Well, that's right, Sonia. Let's highlight a few stocks, though, that are moving around today. Ratnamani Metals, well, that had opened up in the green. Volumes not very, very high out there. Sale, though the numbers operationally were good. The problem was in terms of, the debt moving up. So that's why the stock is more or less flattish. More clarity is awaited on that front. Bahista earlier today told us that Z Entertainment's numbers were lower than expected. So that one, in fact, has opened up with a cut of close to around 1% or thereabouts. Let's see how other stocks are reacting. Campus Activewear, well, the revenue growth was only around 7.5%, or the EBITDA as well was low on higher raw material costs. So that's opened up with a cut of around 2.5%. Remember, it's seen a very, very good run of late. A couple of other notable movers is Linde India, reacting to its numbers out there. So Linde, I think, was expected to open up in the green. There was some margin expansion as well, up close to around 1.5%. On the flip side, Castrol will get the management in just a bit. The numbers are disappointing. GSPL as well, the numbers a little bit subpar. So that one as well, I think, has opened up more or less flattish. A couple of names, though, that are doing well. Oil India is seeing some follow-through buying, so good on that one. And Info Edge, after the 9% cut that we saw yesterday, well, that's again down close to around 2% as we speak. Management sounding rather subdued in terms of billing growth from here on, which later on will percolate into recruitment revenues as well. So it explains why the stock is down 2% odd. Prashant.
Right. I mean, it's 40 points now on the Nifty. So we're at, what, 45 actually. 17,816 is where the index finds itself at. The other one was Balkrishna Industries, which sold off aggressively yesterday on the back of earnings. Let's just see if there is any follow-through or any reversal there. That is flat. I mean, nothing so far. Phoenix Limited is starting 2% lower. It's coming up as the top traded loser right now on my screen at least. So maybe we'll have that up. 13-18 or so on Phoenix, on volumes, by the way, and that's the reason I'm mentioning it. Nykaa is turned around. I mean, not even an attempt to get to that trend line I was talking about, 146 or so. Z's, I think Nigel mentioned, 3% lower. Paytm is down about 1.6. Naukri we mentioned, Lupin. I mean, some of this stuff is just continuity from what we saw yesterday. All cargo is down about 9.5%, 10%, 366 or so on all cargo. And so it goes. So this is the picture. Market breadth is picked up. It was almost 1:1, but now it's in favor of advances. 1,000 stocks higher and about 700 stocks are lower. So that's the advance decline ratio. UPL, I think, was one of the stocks which was put out as a technical call earlier. It's up to 2.33% higher, 715. There is Canara Bank, which is coming up with about a 2% gain, and it's got volumes on it. So that's something to watch out for. KPIT Tech is about 2% higher. This is the top volume traded part of the market. Persistent is up about 1%. Price gains are not large, but volumes are quite a bit for this time of the day for these names. And there is Mirza, International, the shoemaker, which is about 13% higher, coming up with solid volumes on the screen. So that's the overall kind of picture at this stage. For the Adani Group stocks, I mean, it's still a mixed kind of scenario. Ports is up about 0.6%. That's Adani Ports. The Ambuja Cements is flat. ACC is absolutely flat. Whereas you've got cuts in Adani Enterprises, which was higher. It's turned around and it's now in the red. Transmission is lower. Green is lower. Power is lower. And Adani Total is down as well. So these are all limit down 5% respectively for the day. Sonia.
Well, a couple of other stocks, since you're talking about the losers and all the Adani Group stocks under pressure, Campus Activewear is the other one that's down about 2%. Lupin has been under pressure for quite a while now. This month, in fact, Lupin is down over 10%. And Ekta was telling us about, how there's a lot of pressure over there. The company in their conference call said that the price erosion that they've seen in the US markets is something that could continue in Q4 as well. And that, I think, has not been taken well by the street. Z Entertainment, very weak numbers. So that is down about 2%. Info Edge is under pressure. The management was very cautious as well, saying that they are in the middle of a funding winter, and that could impact their investee companies. Something like a Bank of India, a couple of other names that are under pressure. So not looking pretty good. But the Supreme Court heard the Adani case yesterday. In case you're wondering on what the latest is over there, the Supreme Court has asked the government and SEBI if a proper framework is in place to protect retail investors and suggested setting up an expert panel. Ashmit Kumar joins us now to give us more details on that. Ashmit, over to you.
Well, just for the context to begin with, it's on Friday that there was the first hearing in this case, and that's when the Supreme Court had served up 3 issues before the Solicitor General. The first was about the sufficiency and the competency of the current framework for investor protection. The Supreme Court had said that middle class has massive exposure to the stock markets, that lakhs of wealth has been eroded, and therefore had sought questions from the Solicitor General on sufficiency of the current framework for investor protection. The second was on whether or not additional legislative or regulatory tools can be used for strengthening this framework. That was the second issue. The third was, what about an expert panel? This was a suggestion that fell from the Apex Court that perhaps an expert panel may be needed to advise, to recommend any additions or changes to the framework in place. Now, these questions were answered in brief by the Solicitor General today before the Apex Court. First up, the Solicitor General, appearing on behalf of the government, he said that the current framework is in fact competent to deal with such scenarios, such shocks, that there are enough secure safeguards in place. That was first. The second, Solicitor General said that at this point, while this current system was sufficient, it was open to the idea that was suggested by the Apex Court for suggesting for having an expert panel. That was the second key takeaway. The third is that, importantly, Solicitor General warned and perhaps expressed concern on behalf of the government that, look, if an expert panel is deliberating on the issue, it could send potentially adverse situation signals to global investors, and that may be a cause of concern. And towards that end, what has fallen from the Solicitor General is that the scope and the remit of this expert committee should be limited, and that the government should be the one suggesting names of experts to this panel, and towards that end has said that it will submit both of them in a sealed envelope only for the eyes of the judges. So no call has been taken on that yet. The matter will be taken up for further hearing on Friday. That's when the Supreme Court will resume hearing.
All right, Ashwin, thank you very much for that. So that is, I mean, of course, different aspects of this issue, which is now kind of broadening out to the courts as well. So that's the Adani story for you. 50 points higher, so still holding on to gains. We are at about 17,823. We'll highlight more stuff which is moving around. Just what, 6 or 7 minutes into market open so far. Now, Sundaram Finance posted an operationally weak set of third quarter numbers. But it is the only commercial vehicle player to see disbursal growth in single digits on a quarter-on-quarter basis. Profit after tax is up 20% on a year-on-year basis. We have Rajiv Lochan, Managing Director at the company, joining in to take some questions. Rajiv, great to have you with us here. Appreciate your time. Thanks very much. Prashant this side. Could you start with what was the reason behind the tepid net interest income growth? On a year-on-year basis, it was a bit subdued. What was the reason behind this, and how are things progressing in the fourth quarter so far, the Jan to March quarter we are in so far?
Well, good morning, Prashant. Thanks for having us back on the show. Always happy to be here. I've explained this net interest income, net interest margin in past appearances as well. 2 or 3 factors are at work here. First of which, of course, all of us know interest rates have moved up and therefore cost of borrowing has moved up. In a sense, we are coming back to pre-COVID levels of cost of borrowing, and we are seeing the repo rate back very much at pre-COVID levels. The second is, M&HCV, which has been an important asset class for us, has been weak in the last couple of years, and that we are seeing a relatively strong bounce back this year. The upcycle of the M&HCV that I've discussed with you is now well underway. And so M&HCV business as a mix of our disbursements has gone up. M&HCV, as you know, is a heavily competed segment with a great deal of pricing pressure from banks. And so that naturally brings the margin overall for the portfolio of ours a little bit lower. So combination of cost of borrowing moving up and the asset mix shifting back to the M&HCV segment is causing this. Frankly, we see no reason for concern. Because all indicators, external macroeconomic indicators, high-frequency indicators are all moving back to pre-COVID levels. And our net interest income and net interest margin is also, in a sense, moving back to pre-COVID levels. We should see that, expect that across the system. This is not something unique to us, I would argue. You will see in the next couple of quarters across the system, net interest margins reverting back to pre-COVID levels, which is, again, just a natural phenomenon. What goes up must come down to long-term sustainable levels. And that's what I think we're beginning to see.
Rajiv, last time also when you were on late December, you said, we can't be sure about the rate trajectory, interest rate trajectory, but hopefully we are close to a peak. We got the inflation number yesterday, Rajiv, which was a big negative surprise, and which means that maybe there is more left here in terms of rate increases, etc. How does that change? Economists are penciling in another 25 basis points, which will get passed on. So does that change how you look at things?
Prashant, you are correct. This was a little bit of an unexpected adverse surprise, the inflation print that came. But I think the long-term direction of inflation is headed in the right way. We should expect quarter-on-quarter movements up and down. So at least we remain focused on looking at what the long-term direction is and taking sort of a through-cycle view. The fine balance between growth, managing inflation, and also getting the currency under control, that impossible trinity, I think, is what the regulator will do a job trying to balance. And in that process, there will be a little bit of movement back and forth. From our vantage point, I think the sensible thing for us to do is, again, focus on ensuring that we can transmit the rate increase to customers as best as possible, ensure that we get the right customer segment mixed within each asset class, and get the right asset mix across our diversified asset portfolio so that we are getting the right balance in terms of yields that we can get. So that's the approach that we're taking. We think, again, over the next few quarters, things will smooth out. And so worrying about quarter-to-quarter movement is something we're not too fussed about.
You also mentioned that the MHCV competitiveness is something that has perhaps hurt margins. If you compare your performance to your peers, the disbursal growth has also been subpar. I mean, you've seen about a 8% disbursal growth on a quarter-on-quarter basis, while a lot of your peers have gone into double digits. Why is that, and what kind of a trend do you see in both Q4 and FY24 in terms of disbursals?
Yeah. So, Sonia, good morning. Nice to connect again. When I assume when you say peers, you're looking at our NBFC peers.
Yes.
I would argue that the NBFC peers are actually have a very different asset mix. I think they've moved away towards the lower end of commercial vehicles, much more towards passenger cars, a lot more towards loans against property, SME kind of portfolio. So I would say there's very limited comparison as far as MNHCV is concerned compared with our traditional NBFC peers. If you look at our own trajectory, we're quite pleased with what we're doing. Quarter on quarter, we are seeing highest ever disbursement levels, well above pre-COVID levels. And we firmly re-established the pre-COVID trajectory that we were on. And so striking the balance between growth, quality, and profitability. Like the regulator has an impossible trinity, we have this trinity that we work with of growth, quality, and profitability. And all those parameters are trending in absolutely the right direction. We expect to close this year at highest ever disbursements. We expect our asset quality to be back to pre-COVID levels, and we expect to deliver healthy profit growth. I think that balance is what our stakeholders, investors, employees are working towards and expect from us.
Okay, all right. Hi, Rajiv. Good morning. This is Nigel on this side. Going by all that you say, let's try to put it in a couple of numbers then. Disbursals are strong. What kind of an AUM growth are you going to end this year with, as well as for FY24? So that's point number one. And NIMs, as you mentioned, they're going to be returning to pre-COVID levels. So what's that number we should be working with? A broad range, given that cost of borrowing as well has gone up.
Good morning, Nigel. As you well know, we don't guide from a forward-looking standpoint. So I prefer not to start a new tradition on the show this morning. I will simply say that we are expecting to continue the trajectory that we are on. We expect the market to get back to a healthy pre-COVID double-digit growth level across all asset classes. In the commercial vehicle segment, we are clearly seeing firmly the start of the upcycle. We are now already back to, I'd say, close to the 17, 18 highs that we've seen as far as MNHCV is concerned. Retail commercial vehicles, SCV and LCV are establishing new highs. Passenger car demand remains robust. Anish was on your show yesterday saying there's a hell of a lot of backlog that they're working with. Likewise with Maruti, Tata, everybody has got a lot of backlog. Tractors are looking very strong. And with the 10 lakh crores of construction and infrastructure investment the government has just announced, we expect construction equipment, which is another important segment, to grow as well. So as far as we can see, there's robust growth opportunity. And our focus remains explicitly on protecting our market share and growing it. So depending on how the cycles move, it will preserve our market share.
So, Rajiv, if you quantify that, what is your market share? If you could give us a rough number out there. And also, going by all that you're saying, double-digit growth, AUM growth at least, is definitely doable, right, for FY24. We're not quantifying it, but at least double-digit growth.
No, there's no question of that, Nigel. I think just the arithmetics of it will ensure that that happens. There are specific COVID-related implications around moratorium and restructuring that have depressed AUM growth, I would say, in the last 6 quarters or so. That will shake off, but more importantly, growth will securely be back. So that's what you should expect.
And margins, Rajiv, last time you were on, although they're not a guidance, but broadly should settle between the long-term range between 4–4.5%, right?
That's correct. I think historically, if you look back at the last 5 to 10 years, we've operated in the 425 to 475 range. I think in the COVID time, given the bonanza that all of us enjoyed, it went up quite substantially. But we think, that 450 to 475 kind of range is something we can consistently deliver over the long haul.
Right. Rajiv, from the last time that we spoke, which was not that long ago, you're sounding a lot more confident. I mean, back then you were saying that affordability is an issue because, I mean, the cost of, trucks, etc., is quite high, for smaller operators. So then demand becomes a bit of an issue. I think you'd pointed to, you said that you were in that CV cycle, you were three quarters of the way in, but there was still some distance to cover. But you're sounding, have things picked up, accelerated, as you see it, even from a month and a half ago?
Prashant, the small road transport operators continue to remain under pressure from a viability standpoint. I think the HCV has decisively moved up towards much higher tonnage. 45, 50, 55 tons are where the HCV is operating at, and therefore the asset cost has now moved up to north of 50 lakhs. So a small road transport operator with 2 or 3 vehicles is already looking at, EMI per vehicle north of 1.25 to 1.5 lakhs, which is quite hard to make work, given that freight rates have not moved at that pace and input costs have actually moved up. So I think M&HCV is for the small road transport operator a challenge. So what we are seeing is them moving towards used vehicles, which is I think a great opportunity, as also towards the intermediate commercial vehicles, which is now seeing historic highs in terms of production, sale, and therefore demand from our customers. So those trends I think are quite helpful.
I have to ask you a quick word on what's happening with the home finance business, because over there, you know, your asset quality has deteriorated quite a bit. Your customer base has declined. What are the steps that you're taking to address these issues, and what would be the long-term call on this business now?
Sonia, the asset quality issues are legacy issues, I would argue. And those are now in the process of being cleaned out, and we're ensuring that we're cleaning out the base and setting up a firm foundation for the future. At the same time, I think the growth that business is driving is again at a historic run rate, which we've never seen in the past. And so we feel quite confident that the doubling down on southern markets, looking at tier 3, tier 4 towns a lot more closely, cleaning out the legacy asset quality issues, focusing much more on the housing finance segment as opposed to builder finance, which we had a bit of focus on before, and driving productivity improvements through technology and digital are the big thrust areas there. We remain quite bullish and hopeful on that segment, especially as housing demand begins to pick up back to the pre-COVID levels.
Okay, all right, we'll leave it at that. Thanks a lot for joining in and you know, giving us your view. By the way, let's get back to the market now. It's picking up a little bit of pace. The Sensex and the Nifty are up about 0.5%. The mid-cap index, though, is still under pressure, down almost 140 points. But the stocks that are reacting on the upside are some of the technology names, Infosys, Tech Mahindra, etc. Andrew Holland is joining in. He's the CEO at Avendus Alternate Strategies. He's joining us on the show. Andrew, good morning. How are you feeling about the macro situation now? You know, the inflation numbers are a bit sticky. In fact, there's an expectation of another 25 basis points rate hike on the 6th April RBI policy. What do you think the impact of all of this would be? I mean, the expectation was that we would be coming to the end of the rate tightening cycle, but now it looks like that's not the case. How do you see the markets react to this?
So I think generally, Sonia, we are coming to the end of the kind of tightening cycle, both globally and locally. And I think from what I've seen of the RBI, they do seem to be kind of following the Fed. Now, listen, every country is going to have a different part of its inflation. Ours is more food and oil, and in the US it's more shelter. But I'm sure today we'll see some figures from the US, showing that inflation is continuing to trend downwards from where we were at the heights. So I think everyone's baking in anyway 25 basis points for the US in March, unless data changes that. So it wouldn't be surprising if we did another 25, but that's probably it. And I think that's what the market's been trying to grapple with in the last few months. In that you've seen markets move higher on the expectation that the Fed will go and hold, and that means that emerging market central banks also will go and hold, if not to be able to bring rates down a little bit quicker. So that's why we've seen the kind of big rally in tech stocks in the US. So I think that's boding well for the markets.
As Sonia said, the markets picked up. Andrew, hi, morning. Just coming to you. The Nifty is up, almost 80 points. But look at the market breadth, if you can have that up for our viewers. It's completely flipped. It was comfortably positive. And like yesterday, almost exactly, it's at the same time as well. 1,200 stocks are lower and 700 stocks are higher. So you can see that crossover which has happened. And lots of names. Look at something like All Cargo. Reported numbers, of course. Numbers were, both revenues and earnings were lower year on year. 13% lower on All Cargo. 352 is where that is. RHIM is another name. 14% lower. 645, 646. That is on very strong volumes. It doesn't come up with this kind of volumes, for this point in the day or ever, but, huge volumes. There is Spark, which is down about 5.5%. IRFC is down 3%. You look at something like a Supreme Industries, which only recently started to show some signs of life, but that is getting smacked down 3% or so. You have Root Mobile, which is down 3%. So, the list is kind of widening, broadening in terms of broader markets, mid caps, small caps, etc., where there is pressure, clearly, even as the Nifty is accelerated a little bit at the upside. Andrew, what kind of trades are you putting on? What are you buying? What are you selling? Not selling, as you call it, renting, right? Oh, no, sorry. That's on the other side. But what are you doing?
Yeah, getting evicted, which you want to say, but I think at the moment we're keeping it again very tight because there's a lot of there's still the data volatility which is keeping markets the way they are, and obviously recent events over the Adani Group has it's kind of soured the kind of foreign investor interest to our markets and put that extra volatility at a time when really the budget was so good. I would have expected the markets to be a lot higher by now. So that's the kind of the positive that I'm thinking of. So I think we're still in this point of where we think if the Fed's stopping, you will get probably a mild recession and deflation at the same point. So the banking sector continues to be a theme that will play out on. And after the budget, obviously, some of the things we talked about before, Prashant, in terms of the capex cycle, we know defense and renewables are going to be there. We know the government will continue to look to kind of secure supply where there's security issues. So again, electronics and those types of industries, I think, will be a big theme to play. So, I think it's going to be a little bit of tale of two halves for us. The first half might be a little bit more challenging because FII flows, I think, will go to emerging markets other than India. But as our growth accelerates in the second half and earnings upgrades happen, I see FII flows coming back more strongly.
Okay. By the way, one space that has come back in a big way is the mid-cap IT space. Even this morning, Cyient is up almost about 3% KPIT Technologies has been sitting at new highs and is now up 10% in this month of February already. Persistent Systems is up about 2% LTI, Mindtree. So there's a lot of volume and price action here. Andrew, how are you feeling about mid-cap IT and has the time come to nibble in?
I'd probably stick more to the large cap IT, only because I think you have to be a little bit nimble in terms of your strategy. If we're correct in saying that the Fed goes on hold, and that's what the market's been saying in terms of the tech stocks in the US, then that's a good tailwind. But obviously it'll be a little bit data dependent in the short term, and therefore I'd probably, going back to what Prashant was saying, I'd probably be renting the IT stocks at the moment for this move up until we're very sure that inflation is on its way down and the Fed's on hold. Then I think the growth stocks and tech stocks will be back in flavor, and obviously the correlation between our IT industry and the tech industry is still quite high. So you get that extra the tailwind in terms of that in the very short term. But it's more of a shorter term play. In my view, to gain the kind of upward swings that you're going to see as investors going to get more comfortable with growth stocks again.
All right. Thanks very much, Andrew. Great speaking with you. Appreciate your time here. As always, quick chat. But thanks indeed. Well, Sonia, you're right. I mean, smaller IT, right? I think you mentioned Cyient, it's up 3%. Birla Soft I can spot, and these are all decent volumes for this point in the day. Birla Soft is up about 1, LTTS is up 2, LTIM, that is LTI, Mindtree, is up about 1.25%. Persistent and KPIT are other names. So mid-cap, smaller tech, IT names is perhaps one area where you're seeing some traction, even though broader markets are not doing well. The Nifty is up 50 points now, so about 20-25 off the high point 5 minutes back. We'll take a quick break here, but we've got a couple of interesting corporate conversations coming up. We have Deepak Bakshi, CFO and whole-time director at Castrol India, joining in to discuss the third quarter performance. And later, we'll have VS Money, executive director and global chief financial officer at Glenmark Pharma to discuss their third quarter numbers. Don't hear from them very often, so that should be interesting as well. Stay with us.